Tehran did not collapse with an explosion or a declaration of war. It failed quietly, almost politely, as machines stopped responding and numbers vanished from screens. ATMs did not spit out warning messages or error codes meant to reassure customers. They simply went dark. Bank branches opened their doors to crowds they could not serve, clerks staring helplessly at frozen systems while people realized one by one that their money was no longer accessible. Within hours, the rial entered a free fall so violent that even seasoned currency traders abandoned attempts to price it. Exchange rates stopped updating because the concept of value itself had become unstable. What began as confusion hardened into panic, and panic turned into movement, as thousands flooded financial districts demanding answers that no institution could provide. This was not a crisis, and it was not caused by an external strike. The implosion was triggered from within, by fear spreading faster among those at the top than among those on the street. Less than 2 days earlier, a confidential directive had circulated through elite government and security circles, outlining emergency financial measures that left no room for interpretation. The state was running out of liquid funds. Deposits would be frozen. Large accounts would be reclassified under the National Security Authority. Private wealth would be redirected to sustain military and internal security obligations. The document was not intended for public consumption, but its existence alone was enough to detonate the system. Once the elite understood that their assets were no longer protected, loyalty evaporated instantly. While the public slept, capital began moving. It did not move through bank queues or visible withdrawals, but through silent channels engineered over years of sanctions and corruption. Shell companies activated dormant accounts. Hawala brokers moved value without leaving trails. Cryptocurrency exchanges spiked in activity. Real estate purchases surged abroad within hours. By the time rumors reached the population, the banking system had already been drained by those who knew how fragile it truly was. The panic that followed was not the cause of the collapse. It was the revelation of one that had already occurred. For years, the Iranian economy survived on managed illusion. Official inflation figures were curated, while real prices were dictated by black markets. Currency controls existed on paper, while insiders bypassed them at will. The central bank printed money not as policy but as survival, funneling liquidity into state-linked enterprises and regional proxy networks while pretending stability remained intact. Ordinary citizens felt the erosion slowly, through shrinking purchasing power and disappearing savings, but as long as banks functioned and salaries cleared, the system limped forward. What the leaked directive did was confirm the unspoken truth. The state itself no longer believed its own financial narrative. The moment trust vanished, the structure collapsed under its own weight. Iranian banks were never positioned to handle a genuine run. Liquidity ratios had been quietly declining for months, masked by internal transfers and accounting maneuvers that assumed deposits would remain static. When large account holders began extracting funds simultaneously, the remaining reserves were insufficient, not just to meet demand, but to even calculate solvency. Some institutions discovered that their liabilities exceeded their assets by margins that made recovery mathematically impossible. The system did not slow down. It fell into a deficit state almost immediately. One institution after another ceased functioning in practice, if not yet in name. Banks tied to state industries were among the first to fail, loaded with non-performing loans issued under political pressure rather than economic logic. These loans were never meant to be repaid. They were instruments of patronage. Once liquidity disappeared, the fiction collapsed, exposing balance sheets riddled with holes that no emergency measure could plug. The greater danger emerged when military-linked financial institutions began flashing warning indicators, revealing that even the security apparatus was no longer insulated from the economic breakdown. The central bank's options were theoretical at best. In a normal crisis, reserves would be mobilized, foreign currency accessed, swap lines activated. Iran had none of these tools available. Sanctions had locked external assets beyond reach, and isolation from global financial systems meant liquidity trapped abroad was useless domestically. Printing more money was possible, but catastrophic. Inflation was already eroding confidence, and any massive injection of new currency would push the rial beyond recovery, rendering it meaningless as a medium of exchange. The authorities faced a binary choice between hyperinflation and paralysis, and neither offered a path to stability. As millions attempted to access their accounts simultaneously, the technological backbone of the banking system failed. Servers overloaded, transaction queues stalled, and outdated infrastructure collapsed under stress. This was not a foreign cyber attack, it was a self-inflicted digital implosion. Payment terminals across the country stopped working. Mobile banking apps crashed permanently rather than temporarily. The psychological effect was immediate and devastating. A frozen screen in a crisis is indistinguishable from confiscation. At that moment, the population no longer questioned whether their money was safe. They assumed it was gone. With the financial interface destroyed, the economy ceased functioning in real time. Businesses could not pay workers. Importers could not secure credit. Fuel distribution slowed as payment guarantees failed. Money stopped acting as money, and when currency loses its function, order begins to dissolve. What unfolded on the streets was not ideological revolt but systemic shock, as people realized the agreement that governed daily life had been erased without warning. If you found this analysis valuable, make sure to like the video. It helps more people see it. Subscribe to the channel for in-depth updates and clear breakdowns of the conflict as it continues to evolve. Don't forget to turn on the notification bell so you don't miss our next report. The situation is changing fast, and we'll be tracking every major development. Until next time, stay informed and keep watching closely.